What if I told you that we are standing just weeks away from one of the biggest wealth opportunities in crypto history? What if the fear you're seeing right now, the panic, the red candles, the negativity across social media, is actually the final signal before a major reversal? Today's video is not hype. It's not blind optimism. It's a serious warning. And if history repeats itself the way it has in previous cycles, then we are incredibly close to a major market bottom. Welcome back to We Are Cosmic, the channel where we break down crypto like professionals, not gamblers. If you're new here, my goal is simple: give you clear, data-driven insights so you can make smart decisions in this market. No emotional trading, no panic selling, just strategy, psychology, and understanding how money really moves. Right now, the entire crypto market is in extreme fear. And when I say extreme, I mean historic levels. The crypto fear and greed index has dropped to levels we rarely ever see. In fact, we are sitting at one of the lowest readings since this index was created. And most people look at that and think, it's over, crypto is dead. But experienced investors look at it differently. Extreme fear doesn't usually happen at the top of a bull market. It happens near the end of capitulation phases, when retail investors are exhausted and institutions are quietly preparing. Let's slow this down and think logically. Markets move in cycles, every single time. Euphoria at the top, fear at the bottom. When everyone is greedy, smart money distributes. When everyone is terrified, smart money accumulates. This is not theory. This is repeated market behavior across stocks, real estate, commodities, and crypto. Now, here's where it gets interesting. Currently, there are massive short positions open across the market. That means a large number of traders are betting that prices will continue falling. But historically, when short interest gets overcrowded during extreme fear conditions, it creates fuel for a short squeeze. If institutions decide to push price upward, those short positions get liquidated. Liquidations force buying. That buying pushes price even higher. And suddenly what looked like a collapse turns into a violent reversal. This is exactly how bottoms are formed. But fear doesn't appear out of nowhere. There is always a macro reason behind it. And right now, that reason is the broader economic environment, especially in the United States, where a huge portion of crypto capital originates. Job openings are declining sharply. In the professional and business services sector, there are now roughly 1.6 job openings per 100 employees, the lowest level in more than a decade. That tells us something important. Companies are running lean. Hiring is slowing down. Revenues are tightening. Even major tech giants have reported weaker earnings, and market reactions have been brutal. When companies struggle, layoffs increase. When layoffs increase, unemployment rises. And when unemployment rises, the Federal Reserve is forced to respond. And this is the part most people are missing. The Federal Reserve has one primary lever to stimulate the economy: cutting interest rates. Lower rates mean cheaper borrowing. Cheaper borrowing increases liquidity. Increased liquidity flows into assets: stocks, tech, and yes, crypto. This is not speculation. This is exactly what helped ignite previous bull runs. So here's the bigger picture. We have extreme fear in crypto, we have weakening economic data, we have rising pressure on the Federal Reserve, and historically, when these conditions align, market bottoms are not far away. Now, I'm not saying we've already bottomed. In fact, I believe we may see a little more downside first. But based on historical cycle behavior, technical structure, and macro timing, we are getting very close. I'm going to show you something very important: the technical evidence using XRP's weekly moving averages that historically signaled previous bear market bottoms with surprising accuracy. If you're serious about understanding this cycle instead of reacting emotionally to it, stay with me. Because what we're about to break down could change how you see this entire market phase. This isn't panic time. All right, XRP Army, now that you understand why the market is in extreme fear, let's dive into the technical side of things and why XRP could hit its bottom much faster than Bitcoin. This is where I shift from macro fundamentals into chart-based analysis so you can see exactly what history is telling us. If you've been following We Are Cosmic, you know I don't make predictions based on hype. I make them based on data, cycles, and repeated historical patterns. And right now, the weekly moving averages for XRP are flashing signals that are eerily similar to previous bear markets. Let me explain. On the XRP chart, the 50-week moving average is shown as a yellow line, and the 100-week moving average is shown in orange. These aren't just random numbers. The 50-week SMA tracks medium-term trends, while the 100-week SMA is a longer-term trend indicator. Historically, when XRP falls below the 100-week SMA, it signals that the market has entered a full bear cycle. And guess what? That's exactly what happened on January 25th this year. To understand why this is important, let's rewind to the last bear market cycle in 2022. Back then, XRP fell below its 100-week SMA in April, and just 2 months later, in June, it hit a bottom of 31 cents per coin. That's an incredibly short time frame. 2 months from a clear technical signal to the absolute low. And that's exactly what makes XRP so different from Bitcoin in these cycles. Bitcoin, on the other hand, tends to take longer to reach its lows. In the previous cycle, Bitcoin dropped below its 100-week SMA on April 24th, 2022, but it didn't reach its all-time low of $16,000 until 7 months later in November. That's a huge difference, and it shows why timing matters if you want to maximize returns in XRP. So why is XRP faster? The answer is market structure. XRP's trading patterns are more volatile, with stronger short-term swings during bear phases. When fear hits, XRP reacts quickly, and when liquidity starts flowing back, it tends to rise faster than Bitcoin. That means if you position yourself correctly, you could enter near the bottom and ride the explosive upside when the bull cycle resumes. Let me put this in perspective. Back in October 2024, XRP was trading around 51 cents. Just 2 months later, in January, it surged to $328 per coin. That's over 6x growth in a very short period of time, and it happened because the bottom was correctly identified and the rebound was swift and aggressive. These are the kinds of moves that don't happen for slow-reacting assets like Bitcoin during similar time frames. This is why I'm emphasizing that now is the time to watch closely, not panic. Right now, XRP is below the 100-week SMA. Historically, that means we're already in the bear market, and if history repeats, the bottom is likely just a few months away, maybe March or April. This aligns perfectly with macroeconomic signals, like the Fed preparing to cut rates and increase liquidity entering the market. Here's the key takeaway. Extreme fear, plus macro fundamentals, plus technical signals, plus positioning opportunity. This is how professional investors approach bear markets. They don't wait until the low is obvious. They identify the signals and prepare to act before the majority of retail investors realize what's happening. I'm going to break down exactly how the Fed's upcoming decisions and macroeconomic trends could trigger a massive liquidity influx, and why that could supercharge XRP's rebound. This is the part most people ignore, but it's critical if you want to understand why the next move could be life-changing. Now that we've established that XRP is already in a bear market cycle and could reach its bottom within just a couple of months, it's time to zoom out and look at the bigger picture, the macroeconomic forces that will likely trigger a massive rebound. This is where most people miss the story entirely because they focus only on charts, prices, and speculation. But to really understand why XRP and crypto could explode in the next cycle, you need to understand liquidity, the Fed, and economic pressure points. Here's the reality. The U.S. economy is tightening. Job openings are at historic lows, and many companies, including giants like Microsoft and Amazon, are cutting costs and trimming staff. This creates fear in the market. Fear that jobs are disappearing, spending is slowing, and investors are nervous. Fear feeds panic selling in crypto, and that's exactly what we've seen in recent weeks. But as history shows, extreme fear is usually followed by extreme opportunity. Why? Because when fear is at its peak, the Federal Reserve is almost always forced to act. The Fed has one primary tool: interest rates. When unemployment rises and economic growth slows, the Fed reduces rates to stimulate borrowing and spending. Lower rates mean more liquidity flows into the economy, which often ends up in stocks, tech, and yes, crypto. Think back to previous cycles. Every major bull market in crypto has coincided with periods of easy liquidity and low rates. And right now, all signs point to the Fed preparing to cut rates in the next few months, potentially around May. That aligns perfectly with the potential bottom we're seeing in XRP. This isn't coincidence. It's a pattern we've observed over multiple cycles. Here's the key mechanism. When the Fed cuts rates, trillions of dollars are effectively reintroduced into the financial system. That money has to find assets to grow in. Risk assets like XRP benefit massively because investors who were sitting on the sidelines or stuck in safer investments start seeking higher returns. The same liquidity that drives stock market rallies can fuel explosive moves in crypto, especially altcoins that have high volatility like XRP. Combine this macro liquidity setup with XRP's current technical position, and you see a perfect storm forming. Extreme fear in the market, historical pattern alignment, and imminent rate cuts create what I call a generational setup. This is why I am paying such close attention to XRP now. The low-risk reward scenario is extremely favorable if we position correctly before the rebound begins. Now let's talk psychology for a second. Retail investors see red candles and assume the market is doomed. They panic sell. But professional investors, institutions, and insiders see the same charts and see a buying opportunity. These are the people who move the market when liquidity comes in. Understanding this difference in mindset is critical. While fear dominates the public, savvy investors quietly accumulate positions, knowing that history favors those who act before sentiment flips. So when I say the market is near the bottom, I mean it from both a technical and macro perspective. History shows that the bear cycle for XRP is short and sharp. The combination of extreme fear, declining job openings, and looming Fed rate cuts creates a timeline where a bottom could appear any time between now and the next 2 months. That's why timing your entry now could make a significant difference in potential returns. Remember, positioning is everything. The next few weeks could determine whether you take part in a generational opportunity or watch from the sidelines. And if you want to follow my exact strategy for this cycle, I'll show you how I'm approaching it in real time in the coming parts. All right, XRP Army, now we're going to get into something that most people completely overlook, the difference in timing between XRP and Bitcoin during bear markets. Understanding this could literally change how you approach your crypto investments because not all assets behave the same way, even in the same cycle. Let's start with Bitcoin. Historically, Bitcoin has a slower, more prolonged bear phase. For example, in the last cycle, Bitcoin dropped below its 100-week moving average on April 24th, 2022, but it didn't reach its absolute low of $16,000 until 7 months later in November. That's a long time to wait in fear, watching red candles and wondering when the market will turn. For many investors, that's emotionally exhausting, but it also shows Bitcoin's pattern. Gradual capitulation followed by a slow accumulation phase before the big rebound. XRP, on the other hand, moves faster. In the previous cycle, XRP fell below the 100-week SMA in April 2022 and hit its bottom just 2 months later in June at 31 cents. That's a huge difference, only 2 months versus 7 months for Bitcoin, and the rebound after that was explosive. By January 2023, XRP had already surged multiple times higher, hitting levels that made many early investors significant gains. Why does XRP move faster? It's mostly due to its market structure and volatility. XRP tends to react more sharply to fear and greed cycles. When fear is at its peak, selling pressure hits hard, but it also sets up for quicker recoveries once liquidity returns. Bitcoin is more of a slow-moving giant. It takes longer to capitulate and longer to rebound. XRP is like a sprinting athlete in comparison. Now here's why this matters for you right now. If we follow historical XRP patterns, we've already crossed the first technical signal, falling below the 100-week SMA on January 25th, 2026. Based on previous cycles, the absolute bottom could happen in March or April, just a few months away. Compare that to Bitcoin, which could take half a year or longer to hit its low. Timing your entry is critical if you want to maximize upside potential. Let's put this into perspective. Back in October 2024, XRP was trading at just 51 cents. By January 2025, it exploded to $328 per coin. That's over 6x growth in only 2 months. Imagine entering at the bottom of the next cycle. The same kind of percentage gains could be possible, especially if the macro factors line up the way they did last time. Timing and positioning are everything. This is why I'm shifting my strategy now. Extreme fear in the market, XRP below the 100-week SMA, macroeconomic signals pointing toward imminent Fed rate cuts. All these factors suggest we could see a short-term bottom sooner rather than later. That's why I'm watching XRP closely rather than spreading my attention evenly across slower reacting assets like Bitcoin. I'll break down exactly how retail investors are misreading this market and why extreme fear is actually the best signal for positioning. We'll talk about the psychology behind why people panic, how institutions think differently, and why this creates the perfect environment for the next bull cycle in XRP. Now that we've covered technical timing and compared XRP to Bitcoin, it's time to dive into something that most traders completely overlook: market psychology. Understanding how fear and greed drive the market is critical if you want to position yourself correctly during this bear cycle. And trust me, this is where the real opportunity lies. Right now, the crypto market is in extreme fear. Every chart, every index, every sentiment tracker shows panic. Social media is full of people asking if crypto is dead, selling their positions, and doubting the market. Retail investors often make the mistake of thinking fear equals danger, but in reality, fear equals opportunity, especially when extreme fear aligns with macroeconomic and technical signals. Here's why. In every market, institutions and professional investors look at sentiment indicators like the Crypto Fear and Greed Index. When the public is panicking, institutions are quietly preparing to accumulate positions at discounted prices. They don't buy when everyone is greedy, they buy when everyone else is scared, and that's exactly where we are right now. Extreme fear creates the perfect conditions for accumulation. Think back to previous XRP cycles. In April 2022, extreme fear dominated the market. Retail investors were panicking, but those who understood market psychology and positioned themselves carefully ended up seeing incredible returns. XRP went from 31 cents in June to multiple dollars in the next bull run. The principle is simple: buy low when fear is high, sell high when greed dominates. It's timeless. Now let's add the macro perspective. Job openings are at historic lows. Companies are operating lean, tech giants are reporting weaker earnings, unemployment pressure is building. All of this creates fear in the broader economy, and that fear spills over into crypto. But here's the key. When the economy forces the Fed to cut rates, liquidity will return in a massive way. That's the trigger that could push XRP and other altcoins higher. And it usually happens after fear peaks, not before. Another factor to consider is short positions. Currently, there's heavy short interest in the market. This might seem scary, but for those who understand cycles, it's actually a signal that a short squeeze could be coming. When the bottom hits and buying begins, those shorts get liquidated, forcing additional buying pressure. This is one of the reasons XRP can rebound so quickly compared to Bitcoin. The lesson here is clear. Extreme fear is not a reason to panic. It's a reason to analyze, plan, and position. If you wait until the bottom is obvious, you've already missed a large part of the potential upside. That's why watching moving averages, macro trends, and sentiment together gives you a real edge. I'll break down my current trading strategy and real-time positioning. I'll show you exactly what I'm doing with XRP and other altcoins in this cycle, how I manage risk, and how you can approach this bear market like a professional instead of an emotional trader. This is where we move from theory into actionable steps that could actually change your results in the next few months. We've talked about market fear, macroeconomic trends, and technical signals. We've compared XRP to Bitcoin and analyzed why extreme fear is actually a signal, not a warning. But now you want to know one thing: what am I actually doing right now, and how should you think about positioning? First, let's set the mindset. Bear markets are for builders and strategic investors. They're not for panic sellers or hype chasers. The truth is, this is when fortunes are made, not at the top during euphoric highs. I've personally navigated multiple cycles, and every single time, the most profitable trades happen near the bottom when fear is at its peak. And based on everything we've covered, extreme fear on the market, XRP below the 100-week SMA, macro signals pointing toward Fed rate cuts, we are very close to that point again. Here's exactly how I'm approaching it. Step 1, observation and patience. I'm monitoring key levels on XRP, especially the 100-week and 50-week moving averages. These moving averages tell me when the bear cycle is confirming its bottom pattern. Step 2, gradual accumulation. I don't buy everything at once. I scale in over time as prices approach historically significant levels. This reduces risk and positions me to take advantage of any short-term volatility. Step 3 is risk management. Bear markets are volatile. Even if we are near the bottom, XRP can dip lower than expected for short periods. That's why I make sure my position sizing is calculated to withstand temporary drops without panic selling. Step 4 is watching macro triggers. The Fed rate cuts, liquidity inflows, and short squeezes are the catalysts that could send XRP soaring once the bottom is in. Timing these events correctly is what separates professional investors from casual traders. Here's an example from history to put this in perspective. In the previous cycle, XRP fell to 31 cents in June 2022. Those who scaled in carefully during the bear market and held positions into the 2023 bull run saw 6x or more returns in just a few months. That's the kind of strategy I'm applying again now, observing, accumulating, and positioning before the wider market catches on. Another key element is information and community. I post everything I'm doing and observing in real time inside my Discord and Telegram channels. This allows my followers to see my strategy transparently and learn from it. Market cycles reward preparation and knowledge. If you know what's happening before others, you have an edge. Finally, the mindset. Fear is opportunity. Patience is profit. Most retail investors panic, selling at the bottom or missing the entry entirely. Professional investors recognize fear as a signal to act carefully, strategically, and with a long-term perspective. And the next few months could present one of the most significant accumulation opportunities in XRP in years. Those who position correctly now could be in a prime spot when the next bull run begins. So here's the takeaway. XRP is in a bear market, but historical patterns, technical signals, and macroeconomic factors suggest a bottom is near. Extreme fear in the market is a signal, not a warning. By carefully observing, scaling in, managing risk, and monitoring macro catalysts, you can position yourself to maximize gains. The key is to act intelligently, not emotionally. This is exactly why I'm locking in my strategy now and why I encourage my viewers to do the same. Stay patient, stay disciplined, and be ready, because once this cycle flips, the next move in XRP could be explosive, just like previous cycles have shown. Welcome to the bear market strategy of We Are Cosmic, where we turn fear into opportunity and position for the next generational crypto wave.